So why do we look at the economic calendar? Because it helps us spot high probability opportunities. Now, this is a somewhat complicated outlook, but it was one that was clearly flagged in the webinars and highlighted explicitly on the daily morning cheat sheet. You can see here at 8:30 a.m. we're expecting S&P 500 buyers at market on Friday, the 30th of August, which is today's date. Now, the whole philosophy behind this was that the US consumer was confident. We could see that US GDP came in higher than markets were expecting. So the jobs market was also showing a fair degree of stability. Yes, there's slightly more joblessness, but that was expected. Nothing to change. The broad outlook of 4 interest rate cuts, that will be positive for stocks. We saw worries over Nvidia's earnings report. The earnings report was benign. There was nothing worrying about it. And then the PCE print we've just had was benign, as we were expecting, because we had the CPI print, the PPI print. Analysts who look at the PCE based on the calculations of that CPI and PPI were saying, yeah, it should be a soft number. So we were confident that was a soft number. So early on Friday, we saw a nice technical setup in the S&P 500, a bullish piercing line setup. That's a 2-candle setup. We had a long support level all the way coming back from October 2023. Trend line tested, supported. The Nvidia worries, we saw a bullish piercing line pattern, which is the open, which is below the previous day's close. And then the market closes up above the 50% retracement of the previous day candle. Paching, we had a bullish piercing line, highly likely to have a retest of these recent highs. And I've just put out a message to the cheat sheet that, there's no way that this should become a losing trade now. And you can see if you're in this here from sort of 8:30 this morning, you can see that's moving up nicely, and you could consider profit taking at this level, or certainly move it to break even. And the idea is either to close as we hit these highs at 5,640, 5,650, just this high from yesterday, or we could potentially look at just holding until the end of play today on Friday. But either way, the outlook remains very robust for the S&P 500 outlook. And it's just simply because the Fed's going to cut interest rates 4 times this year. Growth is fine. We saw a GDP revision, positive. It's the Goldilocks scenario where growth is still robust, inflation is benign, and that's a positive environment for stocks. Nvidia earnings out the way. Market says, well, we had our little panic and now it's over. And now we're back to testing all-time highs. Let's have a run at that 5,670 region. Well, we'll see. September's traditionally a very weak month for stocks, and we're heading up to that overhead resistance area. But you see, that's why we look at the US economic calendar, because every now and then you just spot a real diamond opportunity that you say, yes, there is a strong, high probability of the direction of an instrument for the next sort of, however long. And you can see here, this was just a quick one-day potential opportunity. Some people in the webinars were trading the futures market. We were looking at opportunities there. Some took opportunities in that, and just to sort of fine-tune the entry. But otherwise, that's why we're looking at these high probability calendar events. Don't forget to keep tuned and keep looking at the cheat sheet where we do the analysis, so you don't have to be a full-time analyst yourself. Okay, so what really matters on the calendar this week? Well, we're getting back into action after the summer now, and things start really hotting up. So the first thing that we can be looking for is the Bank of Canada interest rate decision. Now, it's an interesting one. The Canadian dollar has been heavily sold after the Bank of Canada has clearly signalled coming interest rate cuts. Now, why this is going to be interesting is because we're in a very stretched short position for the CAD. So if the Bank of Canada are just a touch more kind of, just push back against some of the extreme pricing, then we could see a short snap higher in the Canadian dollar. It's just we're looking for an extreme oversold position to snap back if the Bank of Canada aren't as aggressively dovish as markets have been pricing. So that's what we're looking for the Bank of Canada. We'll be looking to the detail later, and that will be updated on the cheat sheet. But it's one that's just on my radar. You might think it's a non-event, but actually sometimes when the central bank is pushing the currency to an extreme, you can get a nice snap back, particularly if the communication disappoints markets. So it's definitely one to watch. The other main story, of course, it's the US labour market, and we've got JOLTS job openings coming up. So if we see less job openings than the market's expecting, then that could give the US dollar another little push downwards in anticipation of the non-farm payroll on Friday. So JOLTS jobs, initial jobless claims on Thursday. We'll be covering all of those. Labour market focus now for the US. Inflation has just exited stage left. The central banks are happy generally around the world that the inflation battle is being won. If you just take a look here in, US inflation, look, clearly tracking lower. The headline, core, clearly tracking lower. So what the Fed is looking at, well, we're just worried about the US labour market. You see jobs falling, the headline. And we had the Bureau of Labour Statistics revise those jobs anyway and saying, okay, that's about 68,000 less than was registered here from March 2023 to 2024 per month, a total of 800 plus thousand jobs that have been recorded in error. Okay, so this is, instead of this looking like this nice kind of up, up and down, it's more like this, 68,000 less. Okay, so that's what's going on with jobs, and you can see initial jobless claims trending higher, continuous jobless claims like trending higher. Yes, the US labour market is still very robust. US labour market is still adding jobs to the economy, but what the Fed is looking for, if this slows much more quickly than we're thinking, then that increases the chances of an urgent rate cut. And of course, this is going to be the big decision for the non-farm payroll for this decision about whether the Fed probably cut by 50 basis points in September. See, at the moment, Stern markets see a 32% chance of a 50 basis point cut, but the Stern markets also see 4 rate cuts this year, but there's only 3 decisions, right? So it's quite a high bar to keep the dovish dollar move pushing lower. And we've seen the Dixie just find some cushion at that key support level. If we just take a look here at Dixie, see, we were cautioning against chasing this lower through this big support level. The bearish outlook does remain, but we're just finding a little bit of support there. JOLTS job openings will give us the first sort of mood music, along with the ADP jobs as well, will also give us the mood music for the non-farm payroll on the Friday. That will be the big event. It's just one not to miss, the Friday one. Could see some significant moves in stocks, particularly if this comes in super strong. Then we could see the market start pricing out 4 interest rate cuts this year and maybe think, okay, the Fed will be happy just to do 3. Right? They'll price out that 50 basis point rate cut. So strong jobs, likely to send stocks lower, likely to send the dollar higher, likely to send euro US dollar lower. And that's a key narrative we're going to be on top of. So that's what really matters on the calendar this week. We've also got Swiss CPI chucked in. I'm going to do a quick risk event for that, just because, not expecting anything necessarily, but I don't want to miss it. And there's less data points generally out for Switzerland. So when you do get one, even if there's an ever so slight chance of a surprise, still worth covering, particularly with the dollar moves as well. Okay, folks, that's all for now. Look forward to seeing you in the risk events and the webinars for the coming week.